Since going public in 2010, Tesla stock is about to have its third best year. It's difficult to believe that 2021 was anything other than a success based on the stats alone. Hello folks, welcome back to the channel. In today's video, we will be talking about why Tesla's stock will rally again. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. Tesla's stock has increased by 56%, more than double the S&P 500's gain of 27%. This was also the year when every automaker, including Ford and GM, agreed that Elon Musk was correct, that electric vehicles are the way of the future, and that they needed to act quickly to close the gap. Despite this, no one appears to be overly enthusiastic about the stock at the moment. Part of this looks to be due to Musk himself, who has always been divisive and became even more so in 2021. If it wasn't his Dogecoin tweets, it was his battle with the Biden administration and his inability to disregard political criticism, and often in terms we wouldn't expect from the CEO of a large American firm. Musk is one of the greatest CEOs of all time, virtually single-handedly responsible for making electric vehicles a reality and demonstrating that space exploration has a future. But he appears unwilling to let his work speak for itself. Then there's the hullabaloo around Musk's stock sale. Never mind that his holdings continue to rise even as he sells, since he's converting options into stock and selling a portion to cover taxes. However, Musk's Twitter poll on whether or not he should sell drew unwarranted attention to what could have been a routine series of sales, assuming anything Musk does is ever routine and instead turned into a circus. Tesla shares, TSLA, fell 16% from November 8 to December 20, but are now down only 4%, with Tesla up 4.2%. But it's all just noise. The final factor could be that Tesla is up against the new competition. Ford and General Motors are rushing to get their electric vehicles on the road, including all-electric versions of their most popular models. According to Morgan Stanley analysts, startups such as Nikola, NKLA, Lucid, LICD, and Rivian Automotive, RIVN, have begun delivering vehicles, and Rivian has a customer in Amazon.com, AMZN, which is also an investor in the firm and might buy 300,000 trucks by 2026. The latter may prove to be Tesla's most difficult task. Giga Shanghai has been producing the Model 3 since it launched in early 2020, and nearly 2 years later, Tesla is constantly expanding the number of cars coming off the assembly line. According to a person acquainted with the factory's operations, the electric sedan's manufacturing rate this month could approach 1,500 cars per day. The factory's Model 3 production pace was 800 per day in August. The new rate is also approaching that of the Model Y, which was estimated to be 1,600 cars per day in September, according to the most recent estimate. The surge of Model 3s will also be shipped to consumers in China, according to the source, which should help alleviate some of the country's order backlog. Despite the fact that Tesla recorded over 54,000 Model 3 sales in October, only 422 Model 3s were delivered in the United States. Tesla will almost definitely sell more than that in the next 2 months, given the present high production pace. The information was passed on to Tesla China enthusiast and drone operator Wu Hua, who captured the Giga Shanghai holding lot overflowing with new cars and 36 transport trucks waiting to drive them away in a recent flyover of the factory. Dan Ives, a Wedbush analyst, issued a bullish report on Tesla stock. He stated there are multiple triggers that might propel the growth stock much higher next year in a commentary to back his 12-month price objective of $1,400 for the company's shares. The analyst's most bullish case for the stock calls for a massive 12-month price target of $1,800, or approximately 65% upside from where the stock is trading currently, demonstrating just how well things could go for the company in the best-case scenario. The analyst's confidence in the stock is amazing, especially given the fact that it is already on the rise. Tesla stock has increased by 55% since the beginning of 2021. Furthermore, even the analyst's more conservative 12-month price forecast of $1,400 is a 28% increase from current levels. Here's why the analyst is so bullish on Tesla stock and why he might be onto something. Sales growth in China, margin expansion, and new factory openings are just a few of the primary factors that might propel Tesla stock higher. The Chinese market has recently been one of Tesla's greatest drivers of growth. For example, revenue from Tesla goods in the major market, mostly vehicle deliveries, was around $6.7 billion in 2020, up from about $3 billion in 2019 and less than $1.8 billion in 2018. Tesla's sales in China contributed to 21% of its overall revenue in 2020, demonstrating how significant the region has become for the company. This percentage is expected to rise even further in 2021 as Tesla ramps up manufacturing at its factory in China. Ives estimates that by 2022, market deliveries will account for 40% of overall deliveries. Ives believes that the electric car company's new manufacturing in Germany and Texas, in addition to China, would drive rapid sales growth. Tesla's demand now exceeds supply, and expanded manufacturing capacity from these factories will assist alleviate production limitations while also boosting production and sales. Tesla's annualized production run rate, according to the analyst, may climb from around 1 million units today to 2 million units by the end of 2022. Wedbush anticipates the company's gross profit margin profile to improve dramatically over the next year to year and a half, thanks to economies of scale and the ramp-up of the higher-priced Model S and Model X production and sales since the two cars' recent design overhauls. This margin expansion could be aided by increased sales of higher-priced, higher-margin vehicles. Tesla's outstanding commercial performance could continue. To investors who aren't familiar with Tesla, the company's decision to considerably boost manufacturing capacity over the next year as it capitalizes on massive demand may appear to be a reach. Tesla, on the other hand, has a track record of excellent execution, particularly when it comes to expanding its production capacity. Tesla's factory in China ramped up production much faster than its factory in California, and management has intimated that output at its newest factories in Germany and Texas may ramp up even faster. While investors shouldn't expect Tesla stock to soar to $1,800 or $1,400 in the next year, Ives makes some persuasive points that make this company an appealing long-term investment. Tesla had the EV market to itself for years, and it took full advantage of it. It's getting more difficult now. That isn't to say Tesla won't continue to expand and perhaps even take the lead. But first, Tesla had to show that customers wanted to buy electric cars and that it could scale them. It must now demonstrate that it can maintain its lead. Tesla stock has only fallen once since coming public in 2010, and that was in 2016 when it slumped 11%. In 2020, the stock will have increased by more than 740%, making even a 50% increase seem underwhelming. With this, we have come to an end. Thank you for watching the video. The content in this video is for educational purposes only and hence should not be considered as financial advice. All the financial decisions should be made after doing your wide-spectrum research. Also, make sure that you like this video, comment down your thoughts regarding this video, and also do not forget to subscribe to our channel to stay updated about the latest news.